All right, traders, a very warm welcome. I am Devang Mehra from the Financial Analyst, and I'm here to talk about Yes Bank. So, what we'll do is in this video, we'll talk about the Elliott Wave analysis of Yes Bank. And if you are interested in putting your money in Yes Bank and making that money grow for you, this is the video that you want to watch. So, watch till the end. We'll give you a good conclusion at the end of the video. So, I want to put out a disclaimer, guys, that please use your own minds, consult your advisors before you purchase any recommendation that we give. All the ideas that we give you are from our own analysis and not recommendations. Okay, let's get started. Give it a like, guys. Give it a comment if you are interested in such comment, and share and subscribe. So let's talk about Yes Bank. I want to show you what Yes Bank, what it used to be earlier. I'm opening the weekly charts, and it used to be a very good bank, and it still is. It was around 400 a piece, and currently it's literally become a penny stock trading at 17.55 a piece. So all of us know what happened when Rana Kapoor was at the helm of the bank, and operations have not been running very smoothly ever since. There have been a lot of changes in the management, and that's what I'm here to talk about. You know, the recent management changes done by the RBI, they have actually given some improvement. If you all remember the earnings that was posted on 27th of October, 25th of October, it was quite phenomenal. I would say after a very, very long time, Yes Bank was actually, it posted a profit. Number two, the new management, they have actually reduced the operating costs by, odd 17%. The operating costs have come down, and you might have read the reports. If you haven't, go to Google and search about the Yes Bank quarter results, quarter two earnings, and you will understand that the unnecessary expenses that were being, implemented, they have been reduced. A lot of ATMs have been shut down. Branches that were close to each other, they have been shut down. So also the main Yes Bank office at One India Bulls in Bombay, it has been shut down. So all these things have happened, right? Because the main goal of the new management is to get the bank to revive the bank. And if you all remember, if I'm not wrong about the numbers, SBI's purchase price of Yes Bank, I think, is around 10 rupees. If I'm not wrong about that number. So I don't think SBI is going to allow Yes Bank to come below 10. That is just my thought. That is how I think about the markets. You're free to think whatever you want. That is one point. The other point is that, as I said, new management really wants to revive the bank, and I don't think RBI is going to let Yes Bank fail. I don't think they will let another bank fiasco happen. We've already seen some fiascos in the past, and personally, I don't think it's going to happen. Don't hold me to it. Now let's talk about technicals. This is about fundamentals. You can see that the fundamentals are becoming better, and if in the next 1-2 quarters we are getting some good profits, it will mean 2 to 3 quarters of consistent profits, and we will see a good rise in the share price. That is about the fundamentals. Now let's come to the technicals. I want to give you a Elliott Wave analysis. First, let me show you something very easy. People don't know what's Elliott Wave. I'll go as slow as possible. I have a write-up already ready, which I will try to correlate. So you will learn something new in this video. Let me first show you the Bollinger Band. Very, very interesting. Something has happened. I've been recommending for you to buy Yes Bank in my last videos if you've been seeing. But see what happened in Yes Bank on the daily chart. Yes Bank has taken a very, very strong support at the 20 moving average. And if you all watch my videos, you know I'm a 20 MA trader. And if the trend is strong, so you can see over here, when the trend was strong on the downside, you kept taking a resistance at 20 MA. But when the trend is strong on the upside, you kept on taking a support, you can see, at 20 MA back time after time. That is one very interesting thing that I've seen. So Yes Bank made a low of 17.05, and it's currently at 17.55. So some kind of support has been offered. That's one thing that we have to keep in our mind. But this is not all. We have to go a little bit deeper and try to understand what Yes Bank can really do in the days to come. First of all, please, guys, this is not an intraday stock. Please don't go on Monday and buy tens of thousands of quantities of Yes Bank for intraday. It's not an intraday stock because if you see the intraday charts, it is not moving very, it's not a very liquid security in that sense, which gives you clean movements. Yes Bank is a stock which moves in a very tight range. If a news update comes, it will spike up or spike down, depends upon that. It's a circuit kind of stock. I would like to put it that way. Coming to the daily charts now. What is Elliott Wave? Elliott Wave, basically, I'll give you a little bit of a background, not go in detail. Elliott, basically, markets move in a 5-wave format. So it moves something like, sorry, So markets move something like this. They move like this in a wave format. They will give you a good movement, they will retrace, they will again give you a big movement, they will retrace, and they will then again give you a good movement. After a good 5 impulse wave, then we have some kind of a 3 wave correction, and then again markets will move in a 5 wave. This will continue again, and again, as long as the markets are there. But it's not so easy to define these 5 waves. There are some rules that have to be defined. So our job right now is to see whether Yes Bank is following those rules or not. So I have some write-up. I'm going to show it to you. So it is going to be a video in which you will learn. So make sure you watch it till the end. So yeah, I have the Elliott Wave write-up in front of you. And this is what I have been saying. Elliott Wave prices move in a 5 wave and give you a 3 wave correction. Then again, continue in a 5 wave and give you a 3 wave correction. Applies on both the upside and the downside. So it is a little bit of a technical concept, and maybe it will be a little bit hard for you to understand. But try to be with me, and I will explain the logic. Okay, so see what happens, right? So first, you know what happens is there is a wave one. Wave one is nothing but what we are seeing in Yes Bank right now from 10th of November. So you know things were bad. If you see from 12th of August, from 17, we made a low all the way to 12 rupees. Things were bad. It was a dominant downtrend, and no one wants to buy the share at this price. The earnings was good, but still, if you see, the volumes have not been there when the price has gone up. This is called the wave number one, from 12.5 all the way to 15 rupees. This is the wave one impulse wave. I'll show you what are the characteristics. Wave one is usually a weak rally. Only small number of traders. You can see the volumes were not very strong. Not a lot of people are there. If you compare these volume and this volume, not a lot of volume is there when the price was going up. It's a weak rally because overall the trend was negative and no one wants to let the stock go higher. This is because fundamental news is still negative. You know, one quarter result can't change the entire outlook of the bank. News is still negative, but there is some hope of recovery. So intelligent money comes into this picture. People like you and me can't enter, but there is intelligent money who have information about this matter who enters. That's why it's a weak rally, and it is considered that the downtrend is still in force. What is a wave two? Wave two is nothing but a correction after a wave one. If you see, obviously markets can never move in one single direction. There has to be some kind of a retracement or a pullback, as you all must have said. So you can see when the markets moved up, this was a very weak correction that you saw in the market. Is this a reversal? It would be a reversal if the volumes were high. But if you see in this example, volumes were not high, they were quite average. And it's not as compared to these volumes you have seen earlier. So volumes were low, so it is just a retracement of the rally that you have got. So this is wave number one. This is wave number two. Things are not good as of now. When do things become cherry? Things become a cherry on the cake when these highs are broken. When the top of the wave one is broken, this is where things will become cherry, because this is considered as a fresh breakout and the structure of lower highs being broken at this point of time. Earlier, market was in a lower high and a lower low structure. Now the structure has changed from a higher high and a higher low structure. So let's come back to that. This is called the wave two. It's a sell-off that we see from wave number one. It is not so easy. I have to talk about Fibonacci numbers, so you have to be with me. So please see the video till the end, otherwise you will not understand. Now, what is wave three? This is considered as the longest wave. Generally in Elliott waves, this is the longest wave. So you can see in this example, wave one was small, wave five has yet to start, but wave three was from 13.9 all the way to 21. So wave three is the longest wave. And as I said, the structure changes after this point of time. So this is where the markets become bullish and everyone will start to buy. So you can see exactly the volumes coming in. This is a huge volume coming in. See this, the huge volume participation, because people think that this is now becoming a turnaround story. Please note, I'm watching a one-day chart. So that means I'm being a positional trader and not an intraday trader. So wave three, as I said, is the longest wave. It should be the longest wave when it comes to Elliott wave. It's the largest and the most powerful wave of the dominant trend. Understood. So when do people buy? Just to repeat, they will start to buy viciously when the high of 15 is broken, which is the top of the wave number one. As I said, this example over here. Now coming to the wave number four. Wave number 4 is again a correction in your wave number 3. Obviously, when the markets will move up, there is going to be a correction in wave number 3, and this is called your wave number 4. And finally, we have the wave number 5. This is the last wave of the wave dominant trend, and this is just starting out. This is what I believe. I might be fully wrong, but this is what we have done. If you are in our community, you already know how much quantity of Yes Bank we have already bought in our groups. And personally, our price of buying Yes Bank in TFA is 15 rupees. I believe Himalaya has it at 11.5. So we have done some good buying in Yes Bank, but that doesn't mean you buy it. Use your own minds. I'm giving you an analysis. Try to understand and then analyze whether you want to buy it or not. Okay. Now wave 5 is the last wave, and generally wave 5, what happens is whatever is the length of the wave number 1, that will be the length of wave number 5. Because if the wave 3 is the longest, this rule has to apply. So now my job is to show you some rules of Elliott wave. This is very, very important. You have to understand these rules. Otherwise, you can't make these rules correctly. Okay. So there are some guidelines that you need to know. Elliott wave guidelines and rules. So first of all, Elliott wave rule, there are 3 to 4 rules that you have to follow in Elliott wave. Rule number 1 is wave 2 cannot retrace 100% of wave 1. Please have a look at this. This is the wave number 1. Has the wave number 2 retraced 100%? It has not. So that means Elliott wave will be applicable here. This is the rule number 1. I have showing you write-up. This is the NSE write-up. So the reason I'm showing you this write-up is so that you know I am not fabricating stuff. It is out there. It's on Google. If you don't have this module, go to Google, go to Wikipedia. There are tons of sources. So again, I'm being on the grassroots levels. There is much more to Elliott wave. So obviously you will have to contact us for more details, but just try to understand the basics. So rule number 1, wave 2 cannot retrace 100%. In Yes Bank, the wave 2 has not retraced. So this means Elliott wave is active. Rule number 2, if wave 2, by the way, retraces 100%, then you have to count again. Counting again basically means then you will have to start again from this point and consider this as wave number 1. Okay. What is the rule number 2? The rule number 2 says that wave number 3 can never be the shortest. This means that if the wave number 3 is longer, then that is good. That is what the thing is. And if you see this example, wave number 3 is the longest. It is much bigger than wave 1. It is much bigger than wave 2. So this rule is also satisfied. Yes Bank is satisfying this rule. Elliott wave is still in practice. It is okay. If your wave 3 is shorter than 1 or 2, this means something is wrong and you have to start the wave count again. I hope this makes sense. And finally, rule number 3. Wave number 4 can never overlap wave number 1. Extremely important. See this in the photo. If this is the top of the wave number 1, then the correction from wave 3, wave 4, it can never overlap. Means the wave 4 can never come below. It has to stop above the top of wave number 1. Is this being satisfied? This is the wave 1 top. This is the wave 4 bottom. Is it overlapping? No. All 3 rules of Elliott wave are being satisfied. They should give you some kind of anxiousness, and you probably are already noting it down that we need to buy Yes Bank. But let's talk about the Fibonacci numbers. That's not where Elliott. It's a very vast topic, guys, and it's something very, very interesting in Elliott wave. Let me show you the Fibonacci sequence, because that has to be also discussed. If you don't know Fibonacci number, it's a very, very old mathematical concept. It basically tells you how much of a retracement can happen in the market. But understand this now. Fibonacci relationships between Elliott waves. So first of all, what is the Fibonacci relationship of wave number 2? So this says clearly that wave 2 is always related to wave number 1. Meaning wave 2 will either retrace 50% of wave 1 or 61.8. It can't be below that. And let's see what the retracement is. So if I open the Fibonacci retracement, wave number 1, you can exactly see that this is your 50% retracement. I'm sorry, I've drawn it incorrectly. Yeah, from wave number 1 to wave number 2, you can see exactly the 50% retracement, 38.50%. That is happening. So Elliott wave rule is satisfied. Number 2, let's go to the second rule. The wave number 3 has to be related to wave number 1, and this should either be 1.618 of wave 1 or 2.61 or 4.23. It can't be smaller than that. That's the main thing. Something to grasp here is you can't be smaller than that. If you're smaller than that, means wave 3 is small, wave 1 is big, the rule is off. So let's understand that. This is the wave number 1. Let's try to open the Fibonacci sequence. So this is wave number 1, and I've drawn it out from this high to this high. And you can see the wave number 3 is much more. It's around 2.618. And exactly that is only said, that wave 3 has to be related to wave number 1. It has to be minimum either 1.618, 2 or 4.3. And we are currently just a couple of odd points up below, above 2.618. So again, rule is satisfied. It is not wrong. And finally, let's talk about wave number 4. Wave number 4 is always related to wave number 3. It has to be either 23.6, 38.2 or 50%. But it cannot be more than 61.8. This is the rule to be followed. In no case, wave 4 can be more than 61.8% retracement. Let's find out the wave number 3 retracement. This is the wave. And exactly at 0.5, we are not at 61.8. Another rule satisfied in Elliott wave analysis. We are being at 50% retracement. Finally, wave number 5. Wave number 5 has not started yet. We are at wave number 4. We are just trying to forecast the future like we have done in the past with Nifty on 21st December, with FSL already done that, shown you the results. So this is a potential idea for you traders to understand and try to put some money. Maybe it can become a multi-bagger later. Wave number 5 is related to wave number 1. If wave 3 is more than 1.618 times, is it true? Yes, the wave number 3 is much more than 1.618 times. So we have to see the rule number 1, not rule number 2. So then wave 5 will either be equal to wave 1 or it will be equal to 1.618 or 2 of wave number 1. Understood? So if wave 3 is the longest, I'll put it in very, very simple terms. If wave 3 is the longest, then the rule is that either this entire distance, let me just mark the price range, then the rule says that this entire distance will be the distance your wave number 5 will be traveling. This is one scenario. If we use that scenario, then Yes Bank potential target is coming to 20 rupees, short-term target. If I'm not using this, if let's say it is also saying that it is possible that you go 1.618 times of wave 1, that is also possible. So if we are using such terminology, then we are getting targets of 21, 22 levels also. I hope I'm trying to make some sense. This is about Elliott Wave. Something which I like particularly is not only Elliott Wave is satisfied, but I like 20 MA, and we are stopping at 20 MA. So now the question is, what can you do from here? Is it a good purchase? A lot of people ask me that Yes Bank can go down. I have to show you one very important thing. Just give me one more minute. One very, very, very important thing. So as I said earlier, markets move like this in a 5-wave impulse and a 3-wave correction. Now, people are telling me a lot of things. That they ask me that, what if that, as you said, it's the last wave is left. So we've already done with the 4 waves and the last wave is left. Let's say last wave is here. And then they will tell me there is a 3-wave correction, as you said. Yes, there will be a 3-wave correction, but there is an important rule. People are asking me, what if this 3-wave correction goes something like this? I will give you a very important rule. Till now, all the Elliott Wave principles are satisfied. There is a very, very important principles also about your corrective wave. And this is the guideline number 3, which I have missed. And this tells you that the corrective wave, the ABC pattern, what's ABC? This is your 1, 2, 3, 4, 5. This corrective wave ABC, after the 5 dominant waves, it has to end prior to wave number 4, meaning that this has to become the bottom. You cannot go below this. Let me show an example. Have a look at this. If wave number 4, this is the low, the corrections that happen, they have to stop. They have to stop here. That means that wave number 4 will become the bottom. Also, I'm very sorry, I forgot another very important rule. This is the rule number 1, that wave 3 is longest. You've done that. Also, rule number 2, the form of 2 waves are alternate. Extremely important. This is something that people don't understand. If wave and 2 and 4 waves, they have to be alternate. Meaning, if wave number 2 is a vicious sell-off, means a sharp sell-off, wave number 4 has to be flat correction and vice versa. Meaning, see it on the chart. If wave number 2 is sharp, wave number 4 has to be flat. If wave number 2 is flat, wave number 4 is sharp. Is this being satisfied? Have a look yourself. Wave number 2 is flat, wave number 4 is sharp. Another rule satisfied. I am literally going bonkers at this point of time. I have actually not seen in this past couple of weeks so many rules of Elliott Wave being satisfied here. And I want to give a shout out to Mr. Sumit Gupta, and he's one person who has identified this pattern. So I want to give him full credit for this, identifying Yes Bank and giving more analysis on Yes Bank. So as I said, these two rules are very clear. The wave 2 and 4 have to be alternate, satisfied in Yes Bank. Furthermore, this correction, the ABC correction has to end prior to wave 4. So this I don't know. So now what can we do in the market? Extremely important. What is the stop loss, etc.? If a person is doing a long-term investment in Yes Bank, let's say I want to do a long-term investment. So it doesn't really matter if Yes Bank goes up 1 to 2 rupees. Why? Because you're looking for 70, 80 bucks of profit. Personally, my team is expecting a profit. Our community is expecting a target of 80 rupees of Yes Bank in the coming 1.5 years. That is what we are expecting. We might be totally off the hooks. We don't know, but we would like to give such good targets. I don't think currently any brokers are out with their coverage on Yes Bank, but I think everyone is on neutral coverage and they're on sell coverage. But right now, no one has come up with a buy coverage, I believe. Please correct me if I'm wrong. The other thing is, what can be your SLs? Now, that's the main thing. Again, it's my idea. Please don't hold me for it. Use your own minds. I'm giving you idea. Get this idea, think about it. You have 3 days, and then you can thank me later. So currently, as I said, SBI has bought, if I'm not wrong, at 10 rupees, they have bought Yes Bank. So they are not going to make it go below 10 rupees. So one potential SL that you could have put is below 10 rupees, maybe 10, 9.59. So that if it goes below that, means something is really wrong with the bank. That's a loss of 7 rupees. If you go for my target of 80, that's a good 10 is to 1, 20 is to 1 return. So much more, actually not even that, it would be a big return. So that is one idea. The second idea is, if you want to be more risky or conservative, I would say, you can put a SL below these lows, because these lows have not been tested out. 11.9 or 12. It's a very, very pivotal point. That's another idea of SL you can put for a short-term trader. What if you want to be really conservative, that you are a person who has limited funds and you really think Yes Bank is totally worthless, and you want to be really conservative? So if I use that rule number, this rule, that the wave 4 is the bottom and even the correction can't go below that, because if the corrective waves go below wave number 4, then my exact analysis what I'm talking about is completely useless. So then I think you understood, your SLs will come below wave number 4. It has to come there. So if you are a person who's extremely conservative and just wants to put some money based on this idea, then you can put an SL over here. So I will say put an SL at 16. Let's be a little bit, 16.5 can be okay, but ideally it's something at 16.85. But I would like to give some margin because volatility is massive currently. So I would like to give an SL of 16. That could be okay. That's a 1.5 rupee risk. And even if you go for a short-term basis, I gave you a target of 20 rupees based on Elliott wave number 1. So 20 can come. So that would be a very good, a 3 rupee target with just a 1.5. It's a good 2:1 ratio. So these are some potential ideas I have given you out. Think about it. If you have any doubts, leave it in the comment section. Share it with your friends. If you like such video ideas, comment, let me know, and do subscribe to our channel. That's it for now, guys. I'll see you in some time for analysis of the markets on Monday. Thank you so much.